good morning, traders. And certainly it's going to be a day where we're going to see tight ranges coming through in all parts of the market. Whether you're in equities, we're expecting the ASX, the Nikkei, the Chinese equity markets to have fairly tight ranges. In currency markets, it's going to be no surprise that you don't really want to be taking too much risk on ahead of what it could be a big volatility event in the shape of the FOMC meeting, where at 4 o'clock we get the Fed statement coming out, we get the potential changes to their economic projections, including where they see the Fed funds rate going to be for 2018, 2019, 2021 for the first time, and of course their long-term estimates for where the Fed funds rate will be going over the future years, which of course is their long-term neutral rate. We also get Governor Powell speaking shortly afterwards, and he'll have a chance to assess some of this US data where we've seen a very, very strong ISM manufacturing service number. Of course, wage data is kicking up a little bit. We saw the US consumer confidence numbers coming out last night at the highest level since 2000. They've been a good precursor for where the S&P trades going forward. But of course, there's a good chance there to mark to market how everything goes. He will also have a chance to look at the trade tariffs and the impact that's going to have on the US economy longer term. Now, I don't think we're going to have a huge amount of information for him to really distill at the moment, but we'll probably see that coming through in the December meeting when they have a bit more chance to understand how these tariffs are going to impact their assessment of the US economy going forward. Now, how do we trade this meeting? I think, first of all, the idea of what they see about accommodative policy, I think, is going to be a very key situation. I think that's what the algos will be trading off. The idea that if they continue to see their monetary policy settings as accommodative, it gives them further scope to raise rates till they get to a more neutral setting. Past neutral, of course, they get into a more restrictive tight zone where financial conditions will become much more controlled. But if they continue to see their policy settings as accommodative, that will probably be a US dollar positive in the sense that they see much more scope to raise short-term Fed funds rates up towards a more neutral setting, and people will see that being as a more dollar positive. We'll probably see that through the dots plot projections. This is the projections for where they see the Fed funds rate going forward, and whether we see that being more solidified, with the idea that we'll see another rate hike in December. We will get one in September as well tonight, but whether we see another one in December, which is about 80% priced at the moment, well, we'll see another 3 next year, which is their current projections, and whether they continue to see one rate hike in 2019. The market obviously is some way pessimistic of that, and there's potential convergence between the interest rate settings of the market and where the Fed go forward as well. And of course, the dollar may key off that. Now, in terms of currency markets, well, we have seen euro bonds moving quite aggressively higher in terms of yield. I think that's been putting a lot of upside into the US Treasury complex in terms of their yields as well. There's been a repricing of interest rate expectations in Europe, and I actually quite like the euro at the moment as a trade, specifically against the Australian dollar. We are getting into that point now where the ECB are preparing the market for more normal policy going forward. We've seen that from the likes of Benoit Cœuré. We've seen that from the ECB president himself, Mr. Nowotny, as well. So there's been a lot of different chatter coming forward about potentially normalising policy and preparing the market for that. We don't expect to see the ECB looking to hike rates anytime soon. In fact, the market probably is looking for somewhere late 2019. But at this stage, we are seeing forward guidance being their main policy tool. And we are seeing a situation where German bund yields are moving higher, and that's putting upside valuation into the euro as well. In terms of US Treasuries, the key level we need to watch tonight is on that 10-year Treasury, which currently sits at 3.09%. A break of 312, which was the taper tantrum high, but we saw back in May, would be very negative indeed for the Treasury market. It would probably be quite good for the dollar. We'd be looking to trade that against the dollar yen, which we should see break above 113. But that's a big if, and I think we actually may see traders looking to buy those Treasuries at the moment. But we go into tonight's meeting, obviously a big event risk for traders. Will we see the Fed raise rates? Yes, I think that's going to be a given. Will they see policy continue to be accommodative? And I think the interesting thing here is the market is probably going in expecting a more hawkish shift, and that sees, for me, put a gun to my head, downside risk to the US dollar and potential upside for people wanting to buy US Treasuries in this situation. But we'll come again tomorrow and just see how the land lies and exactly what the Fed have said.